morning. Welcome back to Passionate World Talk Radio Network, a wholly owned subsidiary of Global Media Network LLC. Educate, enlighten, entertain, and let's not forget mindfulness. On today's episode of Monday Tips with Lillian, we are going to discuss 6 ways or 6 tips to protect your retirement savings from a recession, since many believe, because of the current administration's tariffs, that it will bring a recession. So, if you're thinking of retiring or you're already retired, here are 6 tips/ways to protect yourself. The stock market, as you well know, is nearly 10% down from its all-time high based on the S&P 500 returns through the end of April. And so they think that there's a potential for a recession. As one person states, there are times to sit back and admire the balance on your retirement camp, but this is not one of them. This is not the time to take a look and say, we're all set. So if you are approaching retirement or you're already retired, you may be looking for ways to pad your savings. You may also be wondering how to avoid spending it when they are already diminished. But take heart, there are ways to build savings in a depressed financial market and ways to avoid drawing them down. Here are 6 tips from the experts to help you. Max out tax advantage savings. If you're not strapped for cash, one way to boost your retirement saving in a downturn is to set aside as much as you can in tax favored accounts, including 401ks, IRAs, and HSAs. The 401k already has high contribution limits, $23,500 in 2025. If you're near retirement, consider pushing your savings as close to the max as you can afford. Americans 50 and over can save even more with, quote, catch up contributions, end of quote, which push the annual 401k limit to $31,000. A smaller subset of savers in the 60 to 63 age range get an even higher catch up limit of $34,750 thanks to the Secure 2.0 Act. Quote, people may not realize the importance of catch up contributions, says Mario Bruno, senior financial planner strategist at Vanguard. Individual retirement account contribution limits are lower, $7,000 to $8,000 for those 50 and older. An older worker might not see the point in maxing out retirement savings close to retirement because the savings won't have as much time to grow. Keep in mind, though, that the savings don't stop growing when you retire. If you retire at 65 and live to 85, then those savings will continue to accrue interest for up to 20 more years. Think of your savings as an investment that will grow through your retirement, not just to retirement, Bruno said. A health savings account is another potential tool to build retirement savings. The annual limit to build retirement savings is $8,550 for our family in 2025, and people over 55 can contribute another $1,000. You can save any money you don't spend. Ideally, you want to think of that as a retirement account, Bruno said. Automate retirement contributions. For long term retirement savers, a depressed market spells opportunity to buy stocks at a discount. Automating your retirement contributions is a good way to keep buying them through the downturn. It keeps you consistent and takes the emotion out of investing, said Michelle Crum, a certified financial planner in Ann Arbor, Michigan. If your contributions aren't automatic, you might miss out on buying equities on the cheap. When markets are down, too many people freeze, Crum says. Or you can postpone your retirement. If you're on the eve of your retirement, perhaps the last thing on your mind is working another year or two. But postponing your retirement, even by a year or two, can be a powerful tool for building retirement savings. A Stanford University study found that delaying retirement by just 3 to 6 months has the same impact on retirement savings as raising your 401k contribution rate by a full percentage point for 30 years. Let's say you put off your retirement for a year, and that year you can max out retirement savings, potentially adding tens of thousands of dollars to your account. And you won't be drawing down your savings, which means they'll last longer once you do retire. It allows for continued income. You get savings from that income while delaying portfolio withdrawals, Bruno said. Staying in the workforce is especially attractive in a down market. It means you won't have to raise your retirement savings while their value is dropped. The downside to working longer is that you have less time to enjoy your retirement later. As a compromise, consider working part time. This way, your nest egg doesn't take a large hit in those first years of retirement, said Colin Day, a certified financial planner in St. Louis. And a part time schedule provides you with more flexibility to do the things you enjoy. Build up cash savings. The closer your retirement date, the more likely you'll soon need to tap into your savings for living expenses. Ideally, you should have some of those savings in cash. A wise goal, retirement experts say, is to amass at least a year's worth of living expenses in cash or cash equivalent accounts, such as high yield savings or money market funds. These dollars will be the first that you will deplete to generate your new retirement paychecks, said Heather Winston, head of the product strategy individual solutions at Principal Financial Group. Cash is especially important in a downturn so you can avoid selling depressed investments. Shift from spending to saving. One trusty way to pad retirement savings is to shift your focus from spending to saving. Start by separating non essential expenses from essential expenses, says Nev Persaud, Persaud, a certified financial planner in Atlanta. Pause spending on non essential expenses, even if that means your adult kid needs to pay their own mobile phone bill. Shift money you would have spent on non essential items to your retirement savings and look for other ways to trim your expenses, Crum said. Small adjustments today, refinancing insurance, downsizing subscriptions, paying off high interest debt, can reduce the income you'll need for retirement. That means you'll be able to withdraw less from your investments during down markets, giving your portfolio more time to recover. Considering delaying Social Security, think of this step as protection against future downturns. If you wait to claim Social Security, your monthly truck gets larger. Your benefit rises in value every year you wait from age 62 to 70. If you can use other assets to bridge the gap, delaying Social Security can act as a form of longevity insurance, providing more guaranteed income, Crum said. A larger check can be especially helpful if your portfolio's growth is temporarily stalled, she said, as in a down market. So if you keep these tips in mind, you will be able to have a comfortable retirement. But you have to plan for it and you have to have a little bit of discipline. Thank you very much for listening to Monday Tips with Lillian and 6 tips to help you manage your retirement or soon to be retired savings in a recession. You can listen to this program by going over to passionworldtalkradio.com/ and scroll down till you hit State of Current Affairs. Click on that link, take you to a web page where you see a Google link. Click on that, and that will take you inside our YouTube channel, PWR Network, _PW Talk Radio. This show is sponsored by 2 companies. One is Ruby, RUBI.ai. And you need to go over to http://AI-with-Lillian.com. It'll take you over to ruby.ai, and it will also show you on that page testimonials for the app, a demonstration of how to use it, and then sign up for a monthly subscription. AI is here to stay, and it's only improving and getting smarter every day. So join the bandwagon now and buy Conscious Research Solutions, your research assistant. Check us out on passionateworldtalkradio.com/research made simple blog. It goes on and explains the pain points of what involves in doing proper to get the best results when you do your research. And while you're there, scroll down, click on Calendly, and sign up for a free 15-minute consultation should you need help with doing any kind of research. And if you like our programs and want to continue hearing them, again, go over to passionworldtalkradio.com/donation. We're one of the few and far between woman-owned, woman-run internet talk radio stations. Thank you very much for listening, and we'll see you next week.